All right, so our journal entries on the last step recorded every transaction one by one, and the T accounts do something we call summarizing. And if you look at them, you can kind of see the T here, right? You got a T. I know I have like a bottom line here on it, but generally what you're looking at is you can just draw a T and you have a T account. And if you notice, there's a left side and a right side. That's kind of a recurring theme here, right? There's a left and a right. And, what did we tell you on the debit and credit rules? What means left and what means right? Well, debit means left. So here's the left side, which is the debit side of a T account. Here's the right side. On every single one of these accounts, there's a debit and a credit. Debit side, credit side. Debit side, credit side, all the way down. But what we want to do as a first step is we want to follow the debit and credit rules and put a plus and minus, because one side, basically what we're going to do here, by the way, is we're going to put numbers on this side and we're going to put numbers on that side of each account. So you're going to put numbers on each side of the account, and it's going to show like the increases or decreases to the account. Now the debit and credit rules are going to determine which side is the increasing side and which side is the decreasing side. And if you remember from your debit and credit rules, any asset increase, say cash increase, cash in is a debit, right? Now, we don't need to worry about the top and the bottom. That was for the journal entries, but debit means left and credit means right. So cash in was a debit. So cash, anytime we put a number on the debit side, the left side of the cash T account, that means we are increasing it. So I want to put a plus sign on the left side. And then the opposite is true too. The minus would be the right side. Anytime you decrease cash, you put it on the credit side of a journal entry. So I'm going to put the minus on the right side of the T account. So then I have 5 asset accounts here, right? Cash, supplies, accounts receivable, prepaid, assurance, equipment. Those are my 5 assets. They're all going to look the same. They're all going to increase on the left, decrease on the right. So let's put a plus and minus on each one of those also. All right, and then let's talk about our liabilities. Well, our debit and credit rules tell us that liabilities increase. Remember notes payable you put on the bottom right? Well, when it increased, so liability increases on the right side. So on my liability T accounts, I'm going to put the plus on the right side and the minus on the left. Right, the plus is on the credit side and the minus is on the debit side. Deferred revenue is also a liability, so you do the same thing. Notes payable, liability, same thing. Now let's look at our equity accounts. Stockholders' equity, common stock. Remember when we had cash in debit top and we gave common stock to our investors? The common stock went on the bottom right of the journal entry. So the increase in common. So what we'll do here is we'll put the plus on the right side of common stock and we'll put the minus on the left side. Retained earnings is also an equity account, just like common stock, so that'll increase on the right, decrease on the left. Service revenue increases equity, so you increase that on the right, decrease it on the left. And then expenses and dividends are where it gets a little bit weird. The one thing you got to know is the expense account is increasing on the left here. And the reason it increases on the left is because when you increase the expense account, you're decreasing your equity, and any decrease in equity needs to be on the left side of anything, either a journal entry or a T account. So salaries and wages, any expense, just the bottom line you need to remember is expenses increase on the left side. Same thing with dividends. Dividends also increase on the left side of the T account. Right, so make sure you get all those pluses and minuses in. And then the next step is pretty easy if you think about it. And what I did is I put the journal entries right next to, you had the journal entries on your other page if you took your notes properly. And all we got to do here is whatever happens to the journal entry, you need to do the same thing to the T account. By the way, before we get to that step, I also want to put beginning balances in my T account. So let's do that first too. I'm going to put on this top line, I'm going to put beginning balances. And notice what I'm doing. They all start with 0 because this company just began this month. So we just began our operations, so every account starts at 0. It's not always true that every account will start with 0 though, so remember that. But this company is going to begin at 0. But you got to put a beginning balance in. So look at the equipment beginning balance and look at the accounts payable beginning balance that I just did here. Why did I put equipment's beginning balance on the left side and accounts payables on the right side? And hopefully it's obvious to see that you put the beginning balances on the plus side of each T account. Right, so every T account needs a beginning on the plus side. So I'm going to fill out the rest of those. I'm going to pause the video. I'm going to fill them all out. You do the same, and we'll get back to the next step in a second. And there we go. We have them all in. You can see all the beginning balances. They're all in place. They're all on the plus side. And we are ready to go. So now what I'm going to do, now let's look at the journal entries. And let's do what should be an easy part. Once you do the journal entries, the T account part should be easy. I'm going to take whatever I did in the journal. So here I have cash and I have money on the left side of the journal. Well, I'm going to put that money on the left side of the T account. So whatever you do to the journal, you're going to do to the T account. So I'm going to put that $20,000 right there for cash. And then right next to it, I'm going to put a little letter A to say, hey, cash just increased by $20,000. Where? Well, it increased $20,000 from journal entry A. Oh, A was the journal entry where we issued some common stock. Right, and then make sure you get both parts of the journal here. Common stock increased by $20,000 on the right side, the credit side. Find that common stock account and make sure you put the $20,000 there. So I'm going to put the $20,000 in my common stock, and I'm also going to label that with the letter A. Right, so let's do a few more here. Cash, look at letter B. Cash, $5,000 left side. Make sure you put the $5,000 on the left side of the T account. $5,000 there, letter B. Notes payable short term, $5,000 right side. Go to the notes payable short term, $5,000 right side. Letter B. Look at letter C. Equipment, $10,000 left side. So find the equipment and make sure you put that $10,000 there. That's letter C. And then the cash went down by $10,000 on the right side. So then just start each side of the T account on the second line here, right? So the left side, we started on this second line with journal entry A. Well, I got a right side entry I want to put in here. Let's start that right here on that second line right there. So I'm going to put the $10,000 right there on the second line, letter C. All right, so I'm going to pause the video. I'm going to fill out the next 4 or 5, and then I'll review with you. And boom, there's some more. Let's do a quick review of what I just did. Supplies, $400. Went to the left side of the supplies account. Accounts payable is increasing by $400, so I put that on the right side of the accounts payable account. Prepaid insurance, $600 increase, left side of prepaid insurance. Cash, $600 decrease, right side of cash. Letter F, we increased our cash by $1,200, left side. And then we'll look at the revenue here. You look at the service revenue account. There it is, service revenue increased $1,200, right side. So let's do now G, H, I, and J. I'll pause the video, you do them. You pause the video yourself too, and then we'll enter them in and we'll review them. And here is G, H, I, and J. G, if accounts receivable going up $6,000, goes to the left side of the T account. Service revenue up $6,000. It's going to go to the right side of the T account, down right about there, right? 6,000 is going to go down here. Next one is cash going up 24,000, goes to the left side of the cash T account for letter H. Deferred revenue, right side, letter H. Salaries, wage expense, $1,500, goes to the left side, letter I, of salaries and wages. Cash going down $1,500, goes to the right side of the cash T account. And then we did cash going up $4,000 when we collected money from our customer for accounts receivable, and the accounts receivable went down right at the top there. So you're putting on the right side of accounts receivable. And let's just do the last two right here while we're at it. You got accounts payable going on the left side, $250. Right, it's going down on that left side. This is letter, what are we at? Letter K. Letter K. And the cash is going down. We just paid cash to lower the amount that we owe, so we'll go to the right side of the cash account there. And then dividends on the debit side, so put dividends, put $2,000 here for the last one, that's letter L. And when we paid the dividend, we actually paid the cash, which is $2,000, letter L. All right, so let's pause here. And what I did here is I put two ending balances in for you. So I took the cash accounts, T account, and the accounts receivable just to demonstrate what's happening here. When you're done doing all your journal entries and you pop them all into the T account, now what you need to do is get ending balances for every single T account. Now there's one ending balance only on each T account. Even though there's two sides of this T account, you got to get one balance. And basically what you want to do is you want to add the plus side. So in your calculator, you're going to start with 0, right? And you're going to add 20,000, add 5,000, add 1,200, add 24,000, add 4,000. Right? Then subtract 10,000, subtract 600, subtract 1,500, subtract 250, subtract 2,000. You should get 39,850. There's only one ending balance, and that ending balance must be on the plus side of the T account. Accounts receivable is a little bit more simple. You started with 0, you added 6,000, and you subtracted 4,000. So your ending balance is on the plus side, would be $2,000. Right? So then, a lot of these accounts that only have one entry, the ending balance is going to be the amount of that entry. It's prepaid. Started with 0, you added 600, you didn't subtract anything, so it ends at 600. Supplies, started 0 plus 400, you end at 400. Accounts payable, what's my ending balance? Well, now look at accounts payable. You're going to add the right side and subtract the left side instead of what you did with the assets, right? You're doing the opposite with liabilities. We add the 400, that's the new accounts payable from letter D, right? When we bought the supplies, and then subtract the 250 from letter K when we paid off some of that bill. How much do we still owe? We'll just take that 400 minus the 250, and my ending balance is showing, hey, at this point in time, at the end of the month, we owe $150 to our suppliers. All right, so I'm going to pause. I'm going to fill out all the ending balances, and then once I unpause, you'll see them all pop up. And this will show all of them. You got 10,000 for equipment, 150 accounts payable, 24,000 deferred revenue, 5,000 notes payable, 20,000 common stock, 0 retained earnings, 7,200 service revenue, $2,000 for dividends, and $1,500 for salaries and wage expense. So those are your T accounts. Enter those into your Connect, and then once you get to the next question, there'll be another video explaining the trial balance.